our family lost a tremendous amount of money buying government-backed security equities like Fannie Mae and Freddie Mac. And then it went, oh, they're not government-backed. They use the term quasi-government-backed, and we lost a fortune. And once I saw that, I'm like, nobody's protected in anything. These securities were sold to us as government-backed, and then there was an issue with the crisis, and then they weren't government-backed. I mean, that's a freaky thing to tell hard-earned working people that have these tax-earned savings in their bank, and they're trusting their financial advisor, and they're trusting these securities that these government agencies or government institutions put out into the market, and then there's loopholes. So I never wanted to be in that position again. That's why I went solely on focusing on investing in myself and what I can control to the best of my ability.
What's up, everyone, and welcome back to another episode of the Market Run-Up. I'm your host, Erin Gambrel, but you guys know me as the Blonde Broker. Today's special guest is Brian J. Esposito, the CEO of Diamond Lake Minerals. He is an entrepreneur and investor focusing on capital markets and tokenization. Thank you for joining the show. I want to kick it off because we had a really massive game last night between the Knicks and the Spurs, and I know you're up in that area, so I wanted to ask, what did you think of Game 4?
Oh my goodness! From what I've seen, and the reactions around the fan base, it's amazing, right? Everybody loves when a city can be help unite a city, and I think New York, based on some of the political landscapes and some of the stuff happening, it's always good to see that type of energy and passion. Same thing with the Yankees and Mets when they have great moments. Or again, any city around the world. So I think New York desperately needs some good energy, some good vibes, and sports always is at the heart of that happening, which is great. Absolutely great. Here's the problem. I've never been a Knicks fan. I've been a Utah Jazz fan most of my life, even though I'm from Jersey. So it's always been hard for me to root for the Knicks for some reason, but glad to see that the great things happening for the city.
Yeah, I'm not a Spurs fan, but I'm always going to be pro like Texas teams. So, really want to see what happens. Maybe they can take it to Game 7. But yeah, I loved seeing the atmosphere of all of my buddies and friends that do live in New York, and all of our acquaintances and some of our partners are up there as well. So,
I'm a conspiracy theorist, so I also feel like there's always a Game 7 because the media networks make money, the teams make money, the merchandise is being sold. So I'm always been like, of course there's going to be a Game 7 of any sport, or whatever the number is for the playoffs. So that's where my head's at anyway.
Yeah, well, we can talk about sports, we can talk about mixed signals with sports, but I kind of want to touch on some mixed signals that we are seeing in the market right now. If you look across markets, equities are near highs. Bitcoin just had one of its absolute worst weeks since 2024.
Yeah.
I talked about that on my last newsletter. Everybody go check it out. Gold is elevated, and bond markets are still flashing concerns about debt and deficits. What do you think the market is getting wrong right now?
I've been very vocal about manipulation. The data does not lie. The reality of data and the citizens of this country I'll speak about. You got credit card debt at an all-time high. A lot of people are behind on their mortgage and car payments in excess of 3 months. Housing prices have been out of whack for a very long time. Data coming out of Miami is worse than it was back in 2007 as far as the housing market there and what's happening. That's is only so much fluff and nonsense, pumps types of energy and commentary from government or from officials that you can do to actually hide that. I won't talk about our national debt because it's really irrelevant once it hit north of 20 trillion. Anyway, it's irrelevant. It's just going to keep going until it gets reset somehow with some new mechanism. So I can't give forward guidance on anything. We have a public entity, Diamond Lake, and we think we're building something very smart and strategic, and including tokenization into that. But that's the only stock that I'm an equity holder in and invest in. I invest in myself with all my private holdings, and now with Diamond Lake. So that's where my focus is. I always try to operate in the idea of what can I control. And companies that I work with, I try to teach and show leadership. Just worry about and focus what you can control. all this other stuff is orchestrated out there to create chaos, noise. People make money off of chaos and fear, whether they're shorting something or they're going long on something, and all that is manipulation, right? There's a good old boys network that I believe laugh at us on a daily basis and just know how to ring the register all the time. And that's there. Nothing we can do about that. But what we can try to do is find some joy throughout the day, find ways to do things that we're passionate about, find some earnings that we can create and that we're happy, and pay our bills and put food on our table. Like, that's really where the mindset should be. It should not be, oh, I need a Ferrari and I need to go on a private jet and I need another Rolex.
That'd be nice.
Yeah, I mean, I want people to go after great things. I want people to reward themselves for their hard work, but there's also, don't chase that and think that that's happiness, because that's not reality. If you're chasing things to be happy, you're going to chase yourself to the grave and never be happy. So these are the things that my mindset has to be in, to your point, like what's happening in the markets. And there is enough history to state that there will be a correction, because there's been multiple of them. So people to just always think that the market's just going to keep going up. And you have some of the biggest IPOs in the world coming up. So that money to buy into those IPOs, or the liquidity for that, needs to come from somewhere, i.e. maybe the reason why Bitcoin took a dip, because people needed cash to be involved in maybe a SpaceX IPO or an Anthropic or an OpenAI or an Anduril that's coming up, or they're leaving other equities or bond positions to free up some cash to put money into this because they believe it's going to be worth whatever. So that's what I think is happening. And I believe there's a major correction it's going to happen at some point. And I think that's healthy. I think that helps brings assets down to a level where people can participate in them again. I think hopefully bring home prices down to a level where normal people can actually go after and obtain a home or some asset for their family balance sheet. And corrections are good. Corrections are always good. They're painful, but they need to happen for markets to reset and people to hopefully rebuild in a way where why we're in this position again after 07 and 08 this quickly is actually offensive towards leadership, because it should not happen this quickly. And people don't talk about nearly 7 trillion of commercial paper that's maturing soon in the United States. That's a very scary number for the markets. And there needs to be opportunities to create liquidity for those buildings and landlords rather than having them foreclose or go back to the bank, which again causes a major catastrophe. So these are the things you can think about, but you should also understand not to focus on that throughout your day, but just, again, work on what you can control and try to do your best to have a good life.
Yeah, it makes you pull back and reflect on the fact that, am I healthy? Is my family around? Am I being a good person? Do I have a roof over my head? Like, that's where we really need to all come back to is where we are right now and being thankful and grateful. So I like that you touched on that. You also mentioned Bitcoin, and I love to talk about Bitcoin as a macro asset. It's increasingly been trading alongside these broader themes like liquidity, interest rates, you mentioned, and institutional positioning. Do you view Bitcoin today as a technological or technology asset, a monetary asset, or something entirely different?
You might not like this answer. I've never been the Bitcoin guy. Why I'm grateful for Bitcoin is it allowed what I wanted to do with tokenization, and I've been involved with regulated digital assets for over 13 years. So if it wasn't for Bitcoin and being institutionalized and the ETF being created around, and then all this momentum around it, then my world of our public company and RWAs, that could never have happened, right? Or at the speed that it's happening. So I'm grateful for Bitcoin for that reasoning. The issue I have with it is when it went institutional and all the Bitcoin enthusiasts were so excited about that, or the OGs, I didn't understand why they were excited about that, because it's supposed to be for the people, right? Once it went into that manipulated world, it is now a commodity that can be easily manipulated by the good old boys network. So that's how I see it. I think the other piece you have to, I'm a math person. I look at things hopefully logically, especially as I got my ass kicked throughout my career and learn. If Bitcoin at one point had 100% of the digital asset market, which it did, and now you're hearing windows of 6 trillion of RWAs coming to market by 2030, you hear 30 trillion. There's a wide spread. But if that movement is happening and we're in the midst of it, then Bitcoin is going to continuously lose market share. It has to, because it's dividing itself amongst other types of digital assets. So in that mindset, it has to continue to drop and or stabilize at some number, and then maybe trade like a gold or a silver at some reasonable number. But people love it. I've never been the MicroStrategy style, which God bless him. He made an amazing name for himself. He became a leader in the space, but I never wanted to put that on our balance sheet because we can't control it. I can control a building that we own, a hotel that we get involved in, a music catalog that we launch. I can control that business and that asset, and I can grow it for our shareholders and our token holders, and I can protect the asset with smart business and smart partnerships and smart distribution. Once you put something on your balance sheet, like a Bitcoin, or once you buy a Bitcoin or any other digital asset that you don't own the asset, then it's a risk. It's go to a casino. It's no different than that. You have no idea where it's going to go. You can look at charts all you want, but nobody knows where things are going to go. So I don't like being in that world. After 07 and 08, our family lost a tremendous amount of money buying government-backed security equities like Fannie Mae and Freddie Mac. And then it went, they're not government-backed. They use the term quasi-government-backed, and we lost a fortune. And once I saw that, I'm like, nobody's protected in anything. These securities were sold to us as government backed, and then there was an issue with the crisis, and then they weren't government backed. I mean, that's a freaky thing to tell hard-earned working people that have these tax-earned savings in their bank, and they're trusting their financial advisor, and they're trusting these securities that these government agencies or government institutions put out into the market, and then there's loopholes. So I never wanted to be in that position again. That's when I went solely on focusing on investing in myself and what I can control to the best of my ability.
Well, Brian, I know you've spent years building companies in both private and public markets. What do you think public markets look like 10 years from now then if tokenization succeeds?
I think, and I'm not being egotistical, I think our model, what we've strategized at Diamond Lake, is the model that future public companies replicate. It's not just tokenization. So you grow and build a company or an asset, and like you're doing with your amazing work, and any way you can, through selling equity, issuing debt, and leveraging your asset, leveraging your cash flows, and tokenization. That's the hybrid model, because you have to be able to talk to every type of investor. You don't want to alienate people that, if you don't understand tokenization, fine. We have public equity that you can invest in, or we can issue debt through traditional offerings and regulated offerings. And if you're a crypto enthusiast or a token enthusiast, hey, we have that angle too. So we have the broad spectrum. Then how do you get the wealth of the world that don't understand tokenization, nor trust it, nor want to put their personal information into an exchange where it's not their Charles Schwab account, it's not their Morgan Stanley account. They don't want to put their name and stuff into some nonsense exchange that may have a hack one day, because it happens still to this day. They may have a liquidity problem, and whatever happens and it disappears, or they have fraud. So how do you bypass all that? Well, if you have a technology-faced company like Diamond Lake that has all these different strategies on building value and boosting balance sheets, and you can do things like special dividend, traditional security or stock owners, a token where there's no friction. Now all of a sudden they have another asset class in their portfolio that they can start to touch, feel, and earn from, and start to build trust around tokens being a real new asset class that are real world asset backed, that have the potential to create new resources and wealth for themselves or for their family. So that's our model. But it only works, which is why a lot of people don't like doing this. It only works if you own the asset, you manage the asset properly and have great management, and the asset can earn for everybody. The last thing the market needs is some bullshit RWA that doesn't have long-term earnings or growth or as protected as possible. You raise some money in a token environment for it, and you can't issue out earnings, you can't issue out revenue share, and the token drops in value. So that's not good for the market, because it even gives more distrust into that new mechanism not being feasible or not actually having long-term value.
Well, you guys also recently announced the ECI transaction to create the fully integrated real asset investment platform. Why make that move now?
right timing. I mean, we were building this anyway and doing it in a public company, but privately with our own network. When we aligned with Mitch DiRamondo of ECI and his father, Barry DiRamondo, who's Steelwave, which is a 40-plus major commercial real estate firm, has done over $20 billion in amazing projects and commercial real estate assets on the west coast of the country. Not everybody you can sit with, and you can probably attest to this, understand anything about tokenization, understand that they need to be working towards having this built into their business model. So much of, especially the commercial real estate world and that era of major owners that are, let's say 50, 60, 70, 80 years old, they go deaf when you start talking about it, right? They don't want to hear about it. They're intimidated by it. They don't trust it, all the buzzwords. But when we sat down with this family and they've been working on this for many, many years and having a digital asset arm and knowing that this is the future of commercial real estate, it was like peanut butter and jelly. Like we did a relationship build and deal structure from March till now, which was really lightning fast to do everything that we've done. But we were able to do it because we were finishing each other's sentences. So why now? Right timing, right family and leadership over there to do it with. And then when you tie in what their world is used to in the private markets or the private capital markets, and you have the ability of a public vehicle like Diamond Lake, and then the tokenization aspect of what we have access to and what we've built, we believe we have, and we'll just stay on commercial real estate for a moment, we believe we have a program that's the future of commercial real estate, providing liquidity to bring these assets over into our balance sheet and grow these buildings. And we have really unique strategies on how do you really partner with the tenants of these massive properties and buildings, provide value to them through some token offerings and through value propositions with Diamond Lake, where it's not just a tenant paying the lease, and if you don't pay the lease, you kick them out. How do you create this true win-win partnership where there's value created around that building? That's a new form and a new fashion of commercial real estate going forward. And the other unique angle to us is Brandon Fugel is one of my dearest friends. He's on our company team, an investor in Diamond Lake. He's the chairman of Colliers International. They're in over 68 countries around the world, and I believe the number 3 largest commercial real estate firm in the world. So timing of proving out an amazing new concept for commercial real estate with Steelwave and ECI, building a perfected de-risk type of new model around commercial real estate, and then introducing it to firms like Brandon and Colliers to provide value to all their clients and landlords. That's the steps we're looking to accomplish at an industry level, not just a one-off gimmicky, here's a building we tokenize. That doesn't do anything for anybody. But if you do it across an industry where you're providing real value and we become leaders in that,
absolutely, yeah.
That's what we're working so hard to do. And then rinse and repeat that in TV, film, music, consumer products, media, all different types of industries that we touch.
What changed, I guess, in the market, or maybe some like market signals that you saw that made it the right time, I guess, to double down on real world assets?
I mean, I've been preaching this for 13 years, so I've always felt it was the right time. I really thought it was the right time after FTX collapsed, because I just assumed that people that love crypto and love tokens are not going to gamble like that anymore. They're going to go into a more sophisticated instrument that have real management. And boy, was that call wrong. But honestly, if that didn't happen the way that it happened, I would not have gotten involved with Diamond Lake, because my mind went, well, there's a disconnect. People, the wealth of the world, don't understand tokens and crypto. There's a lot of friction points, but they know how to buy a stock. So let's position a company like Diamond Lake to be that stock that we believe is the right way to include tokenization into a business model. So that if that didn't happen, then I wouldn't be here talking to you about the work that we're doing. So I'm grateful that it didn't go the way that it went. I'm also of the impression that the meme token world, again, provides a lot of future value in my mind, because I believe that these communities are going to continuously evolve and grow up. I believe they're going to mature. I believe they made some tremendous wealth. Hopefully the smart ones have kept it. And they're going to start looking for cool management, smart management, great assets that are tokenized that they can participate in. So I think we're in the midst of all that happening.
What do you think? I guess we've spent years talking about tokenization now as a future trend, but now we're seeing DTCC, major exchanges like you mentioned, and some of these like larger financial institutions actively building infrastructure. Do you think we're finally moving from tokenization theory to tokenization deployment?
I think pockets, like the work that we're doing, I don't think you're going to see full scale deployment until you log on to your brokerage firm and be able to easily buy a token into a real world asset or some tokenized equity or private company. That's when scale hits. But in the interim, it's important for companies like us to move as fast as we can to have a good flag in the sand of our presence, our assets under management, where we can protect and build value for our token holders and our equity holders. So mass scale and adoption is when it's built into the systems that we're comfortable with, like going on your E-Trade account or Robinhood account and clicking and buying. But until then, the early adopters that are able to buy into some of these great assets with, again, great management around them, I think have tremendous upside and are early to be involved in this RWA movement that's happening. And it's nice to see the momentum around that's happening. It's great to see Securitize doing amazing work on what they're able to tokenize with their relationships with BlackRock and everything. That's a closed loop, right? We want to be the firm that is, for everybody, right? We want to be the company that allows you to buy a token into your favorite music artist or to buy a token into your favorite consumer product or a hotel in Miami. Like that's where we want to position ourselves and create wealth and a sense of pride of ownership to people around the world that never had a chance to buy into these opportunities.
Yeah, that brings up an interesting question, that we're fixing something that's broken. You often talk about capital formation and market access. And for those that don't know, you should definitely check out Brian's X account. It's probably one of my favorite X accounts to follow. We've been following each other for quite some time now. Yep. You're finally on the show, so it was definitely overdue. What is broken about today's capital markets that tokenization actually fixes?
I think a lot of things are broken, but I think LPs, for anybody listening, you typically have an asset that has a general partner. People get together, they want to go after the asset, they own a portion of it, they get their fees from it, then they go to their network and there's limited partners or LPs that invest into that asset. That system works if the LP can get out of the original asset and into the next one. So I think what you have a big problem is there's a lot of trapped LPs that they can't reinvest into the next vision of those GPs or the next asset that those GPs want to either develop, buy, or build. So that's going on. And you have I think you have a lot of smart money that doesn't trust the current markets and are waiting again for a correction, right? I think there's this money sitting there saying there's going to be a correction that they want to go out and pick up assets or distressed assets on the cheap. And I would say that we're one of those, right? I would say even with our alignment with Steelwave, they're probably the best that I've ever seen that go after amazing commercial real estate properties and projects and get them at an amazing rate and build just value day two. So I think you have a lot of people that are doing that. And I don't like ever talking political, but my goodness, between things like tariffs and wars and whatever else, I mean, there is a lot of noise out there. And when you have a lot of noise and chaos, you don't have comfort. And when you don't have comfort, you don't have confidence. And if you don't have confidence, you don't pull the trigger on things. So I think that's happening. And I mean, there's probably 1,000 other things, but I think those are kind of the top tier ones I believe I would focus on.
Well, and we're also, it's a really weird year for the market. And I think this is like probably my third cycle. So I'm definitely used to experiencing bears. I was lucky enough to stable most of my assets early on. So not hurting too badly and just trying to be patient, maybe see what happens in the next 2 quarters or so. But yeah, the crypto market is experiencing one of its weakest periods, like we said, since 2024. Do you think bear markets actually accelerate infrastructure adoption because they force the industry to maybe focus on utility instead of speculation like it has been in the past?
That's a great question. I loved how you articulated that. I would say absolutely, except I think builders build, right? We love seeing that, but I think it's more of when they go in to try to turn around a bear market. I don't think we'll talk just the crypto space. I don't think there's a smart long-term strategy that prevents the next bear market from coming within the next few quarters. Like, I mean, we've heard crypto winter every winter. Like, I don't, that doesn't mean that, and I hate these terms. I hate rug pull. There's certain terms I just get hives over. I hate them for some reason. But the reason that keeps happening is because there's not enough sophisticated management that know how to create earnings that, and use the word stabilize, which is great, that understand how to create at least a methodically, let's call it boring. I don't care, boring all you want, but if you have something that just slowly increases over time and just keeps growing in value, people love, I don't know. I mean, there's too many slot machine token holders that also, they're cannibalizing their own wealth because they leave something immediately before anytime there's a little bit of a shake, they leave.
Yeah.
And there's so much
paper hands, I think.
Yeah, another term. Oh, I'll throw up. Yes. So there's nobody understands long-term anything anymore. Everybody wants everything overnight. And a lot of that is the social media world, that everybody's brain is programmed on wanting to achieve staying at a 8-star resort. And again, some of the thrills of life that, you usually have to pay your dues to experience things like that. You have to earn. And usually most people that go through hell earning money and keeping money. My dad told me a long time ago, making money was kind of easy. It was the hardest part was keeping it. And that stuck with me. So most of the people that I know, that I respect and admire, that work their ass off, when they have the opportunity to splurge, they don't want to. They feel guilty because they knew how hard it was to make it and to keep it. So the people that I tend to get offended by are the ones that were blessed with this massive smart gift to buy some bullshit meme token NFT, make a fortune. God bless you. Like, love it. I'm so proud of you. And then go and put a picture online of a $500,000 Las Vegas nightclub bill, or you buy a Ferrari that immediately depreciates. Like, what did you do? Like, people work their whole lifetime and don't even achieve that, and you did. And the fact that you weren't smart enough to appreciate that gift, I don't even knock you. You just weren't old enough to understand what happened. So I'm just like, it's just sad to see this stuff happening. So when you immediately win on something and you evaporate that money in a depreciating asset or a stupid move, you can't put more money back into the market because it's gone. So these are the things that need to be fixed. The only thing that fixes that is age and life experiences and wisdom, or people that have a mentor that help them navigate, hey, I just had a big win. What do I do with this? So I think that's flushing through. I do think people are getting more mature, and I think you're going to start seeing more stabilization. And my opinion is the meme token world had its day in the sun, and this movement into real assets and real management is they're going to start seeing the wealth that was created there move into a more de-risk protected token environment. And that was a very long answer. I apologize, but that's
a great answer. I'm in the process of writing a book called 1 to 1 Million. I'm writing about the process of what it takes and what it's like to earn your first million, how difficult that is. And sort of when you reach that, how hard and difficult it is to maintain that million. Because I think people, like you said, they think money comes and goes. It definitely goes. A lot easier than it comes. So it's how to maintain it, how we can talk about different income streams, and it's something I'll have to get your input on some of what I'm writing in my thoughts.
Love to hear your
too.
thoughts.
But
absolutely,
yeah, no, I love that you said that. I think your explanation. Listen, this is your show. You can talk about whatever you want.
Your show, miss.
I want to do a segment now about all of the cringe words that Brian hates. So we've got paper hands, we've got rug
I like
pull.
diamond hands though, by the way. I have to like diamond hands.
You have to like diamond hands. What about 6-7?
Oh no. I kind of get up and leave rooms when people start using these things.
we'll add that one. All right. One of the biggest stories in global markets right now isn't really just crypto. It's sovereign debt. We talked about debt. You said you didn't want to talk about debt, but these elevated treasury yields and like growing questions about who ultimately funds government debt over the next decade. How concerned are you about like long-term sustainability maybe in the US and other developed economies?
Yeah.
Like, are we fucked?
I mean, I think we've been fucked for a long time. And I think that we were the fastest Roman Empire in the world to collapse, is my opinion. So, okay. I don't want to misspeak, but I believe a recent last round of bonds that were issued, I believe the government bought a lot of them themselves. Now, we'll do some data on that. We'll do an asterisk on that. So,
Yeah,
if foreign markets aren't buying government bonds or our debt, scary, right? Very scary. Or if they become so insolvent, for lack of a better word, that they can come in and buy too much of us as a country, a scary place to be. I mean, there was a point where Japan had tremendous amounts of U.S. assets and our bonds. So that's what scared the hell out of me about tariffs, because my God, now if the current administration is probably correct about the mindset about, all right, countries, enough is enough. You've taken advantage of us. The problem is they're not going to be there long enough to withstand the plan. I think that plan required at least 10 years. Now, whoever's going to win the next election, because of everything that's happening, they're just going to just undo everything that was done, because most of it was executive orders. It wasn't done through legislature. So that evaporates that. And now you're pissing off our allies, which I don't think is ever a good move. So all that stuff, I think, has put our country at a big, we're a big bully now, right? And now you have a lot of smaller countries that can gather up and be powerful together to not deal or interact with the big bully. So the other thing that offends the hell out of me was current administration praising how much oil we have here in the country, praising it, close the strait. All those countries can buy our oil, praising it. I mean, that's public knowledge. We have so much oil, surplus of oil. Then why are our citizens here, gas prices going up? We have so much of this precious natural resource here. Why aren't we benefiting it as a country independently? And why are we praising exporting it? So there's just certain things that I can't control any of it. How do I operate within my world? How do I not get too offended by it or get too emotional about it? But I don't have, nor I think anybody has the answers to that great question. I don't think Jesus Christ could come down and be the president of the United States and fix everything. I just don't think it's possible. I think it's too far tainted in a lot of different aspects. And we just right now just do the best we can, that people can eat, have some shelter and clothes, and have utility. I mean, that's really, I think, the best that we can do as a nation.
I just had Scaramucci on the show as well.
Oh man, I love
yeah,
Anthony.
and he actually brought up a good point. It was actually the week that we closed the Strait of Hormuz, or the Strait of Hormuz was closed, and he predicted gas prices to reach anywhere between $6 and $10. And if I'm not mistaken, it definitely reached that lower price target in some states. And I don't know where we're going to go, what it's going to look like. I know in Texas it has come down a little bit. But again, gas prices change every single day. So who knows? But I think you're right. I think it's just we've got to live and let live, and enjoy, like, take it day by day, enjoy the roof over our heads, enjoy the assets that we do own and have, and kind of get prepared for the next cycle. And speaking of the next cycle, I think we spent the last couple of years focused on inflation, rate hikes, restrictive monetary policy as well, but historically major asset appreciation, I think it tends to occur when liquidity conditions begin improving. What is the single most important signal that you are watching that would tell you the next global liquidity expansion has started?
Okay. So I'm not going to answer that, because I look at liquidity much different than traders. I'm not a trader, right? I'm a builder. I build companies, I build assets. So when you have an asset class, and I'll tell you what our program and my world, especially at Diamond Lake, is if you have an asset that's earning, and our shareholders and future token holders are earning off of that asset or assets, then they're happy, right? They're getting their dividends, the asset's appreciating, and they look at it, and we've been called the Berkshire Hathaway of tokenization, which I think is really cool description of us. I was humbled and blown away by it, but now I'm looking at it, I'm like, you know what? There's some truth behind that. Yeah. So if you're building something like that, like we hope and we're working very hard on replicating that type of upside, like a Berkshire Hathaway Class A, like what they've done. And you have companies and assets that are performing. If someone wants to leave that asset, whether a token holder or an equity holder, then I, as the company, want to buy it back because I know what we're building. I know the value of that security. So, and if someone I was going to say, so that's the first thing I want to do. But also the investor or the holder of that are hopefully looking in the market and say, well, where would I go that gets a better return than what these guys and girls are doing? Like, so that's what we're building. So that's how I look at liquidity. If someone needs to leave something immediately or is craving liquidity, then I personally don't believe they should be participating in that investment or that asset class. Like that should be, you're gambling with money you can't gamble with. Yeah. So, and buying an equity, buying a token, that's a gamble. If you can lose it, it's a gamble. So I have to stay consistent with my messaging on liquidity because I have a different mindset around it because I don't like the trading mentality. I don't like the market making criminal activity where buyers and sellers don't get a fair shake at the real value of their trade. All that stuff, I'm hoping and praying that blockchain and tokenization helps correct and have full transparency. I would love us to be one of the first public companies that, why do you have to wait 3 months to see if I did a good job? You should see what we're doing hour by hour, right? Because everything's on chain. Like these are the things that how I see, how do you correct manipulation? How do you correct people that don't have fiduciary responsibilities or duties or act ethically or have empathy for their shareholders or their token holders? Like the only way that you correct that is accountability. And the only way there's accountability is complete transparency. So that's how I have to answer that question. So I'm sorry it's not the right answer that you wanted, but I have to stay in that vein.
It's a good answer. You might not like this question either, but it's the question that I ask every single guest that I have on my show. It is my favorite question.
Oh, I'm excited.
So you're gonna have to deal with it.
Okay.
Brian, what is the legacy that you want to leave behind?
Yeah, I have two, and it may change down the road, but I've always been connected with having access to clean water. It should be a basic human right. And I think it should be free, to be honest with you. So I've been very heavily involved in initiatives and technologies and even tokenizing the idea of bringing water treatment plants to market up in a fraction of the time and cost. So that is a legacy I'm always working very hard on because a lot of people don't realize a third of the world doesn't have access to clean, accessible, fresh drinking water. And then a lot of the water that we are showering and drinking is poisoned, right? So there's something that needs to be shifted and corrected there. And I hope the work that we're doing is going to be a leader in that. And the other thing is having billions of people being able to have a sense of pride and ownership into a fractional token that they have in their family hut or their home. So I want us to be a company, and I want us to be hopefully a leader that allows people to be able to buy into an asset or a revenue share that they never had access to. They're always blocked out of because they don't have the right network or the right access. And I hope our company gives the ability for people to throw a quarter, 50 cents, a nickel into an asset class where they have sense of ownership, and that gives them sense of pride. And I think things like that elevate humanity and really create a shift in what we're trying to do here with this little bit of a life that we've been blessed with.
Yeah, no, I think that was a great answer. Thank you for that.
Thank you. That was a great question.
Yeah. Well, I appreciate you coming on the show. We'll go ahead and wrap it up. That's it for this episode, everyone. If you guys like this episode of the Market Run-Up, make sure that you are subscribed, like, and follow along for more. We will see you all next week.